Fast money final call. The M&A rumor mill proving a boost for a healthcare name. Meanwhile, UPS may not have delivered on earnings, but it's not getting in the way of the stock's current momentum. OptionMonster.com co-founder Jon Najarian joins us. Let's talk M&A first. What's the name here, John?
Well, M&A, it's Johnson & Johnson, Dylan. This is the name they draw like a gun, to quote the line from True Grit. Whenever there's a dip down to about the 100 level, which we just had in Intuitive Surgical, they draw Johnson & Johnson out, J&J, and they say, aren't they a logical buyer at this level? Shares were over 300 back in August of just this past year, and then they cratered down to $87 and change just a week ago. But since then, Dylan, we've had a number of days where we've had strong out-of-the-money call buying in this name and unusual stock activity as well. So it showed up on our stock heat seeker and the option monster heat seeker for options. We believe that is because of people buying into this rumor that the stock might be taken out for $150 a share.
All right, let's talk UPS for a second here. It's easy to make a case against a company like this in this environment. What's the case for it?
Case for it is that against very bad news, the stock managed to rally. Yesterday it put in a new multi-year low, all-time low, in fact, I believe, for the stock since it's been publicly offered in 1999. And then on some stinky numbers, there's no two ways about it, those were horrible numbers today, and the salary freezes for 30,000 workers, the stock gets up and runs $3 to the upside. So you know the situation, Dylan, when you have a stock that responds this way with a rally like this to just horrible numbers, that means that at least this sector or this stock is more likely to trade higher than lower over the near term.
And then while I got you, what is your interpretation of the recent momentum in technology names in the NASDAQ in general?
Well, unfortunately on our scans, we don't see a lot of that. So quite frankly, we see a lot of retail buying in those names. I don't see a lot of institutional accumulations that we like to cite. And so on our scans, Dylan, we're not quite seeing or in agreement with what other people are seeing for technology. I see it elsewhere, I just don't see it in tech.
And then what about the big cap drug names, the Mercks and the shearing plows that are showing up a little bit today, at least on the stock side?
Yeah, they are finally getting a little bit, and I think some of that is because you're starting to see not just the rumors, but you actually have the Pfizer-Wyeth deal. There's going to be other deals in that space, and I think people are positioning ahead of it.
All right. A pleasure, Mr. Najarian. We'll see you tonight.